Okay, so these are the solutions for the sample problems in intercompany transactions. Okay, so let's start. Okay, now tanggal ko muna yung video ko pala yan para ayun, yan, para walang nakakairita. Okay, so let's continue. This is the first problem. Okay, ano yung question sa problem na to? Okay, before we read, no, dapat alam natin yung objective. So in this problem, it's asking for the consolidated sales and cost of goods sold, okay, for these companies. Now, what are the specific principles, okay, or concepts that you have to remember when we compute consolidated sales and cost of goods sold? Number one, all intercompany sales, okay, or intercompany transactions should be eliminated. So you have your intercompany sales that will be eliminated against our cost of goods sold, okay? And then number two, okay, your cost of goods sold will be adjusted, okay, so that it will reflect its effects in your consolidated net income, which means realized gross profit, okay, will be deducted and unrealized gross profit will be added. So sir, nakakalito po yun. Why? In the consolidated net income, the realized gross profit was added. Okay? And the unrealized gross profit is deducted. But if we are computing for the CGS, it's the opposite. You know, para yung effect niya sa CNI ay ganun nga yung opposite. Okay, so let's continue. Let's compute for your consolidated sales. Okay, after reading this problem, okay, ano ba yung kailangan natin to compute for the consolidated sales? You have this. Okay, the sales of sino si Sheila? This is the parent. And then you have Joanne, the subsidiary. Okay, so you simply add the two. Okay, and then you remove your consolidated sales. During 2016, Sheila sold merchandise to Joanne for 75,000. So tatanggalin natin yun regardless of whether it's upstream sale or downstream sale. Okay, so that's now your consolidated sales. Cost of goods sold, okay, mamaya computein natin yan, no? Pero ngayon concept lang tayo. Cost of goods sold, kailangan natin to. Okay, you have to add that and then again, we remove your 75,000. Kaya rin dito, remove 75,000. And then you add your unrealized gross profit and then you deduct the realized gross profit. By deducting or reducing your cost of goods sold, no, with your realized or by your realized gross profit, you're actually increasing your CNI. Kaya dinadagdag to sa CNI. Okay? While adding, no, when you add your unrealized gross profit to your cost of goods sold, okay, bumababa naman yung CNI natin. Okay po? So, ayun. Now, let's try to apply that concept. This will now be your consolidated sales. Okay. Again, dagdag natin yung sales ni parent and subsidiary less the intercompany sales. Okay. And you will now have your consolidated sales. Same with your cost of goods sold. Okay. Cost of goods sold of the parent and subsidiary less your intercompany sales, which is 75. Now, we have to adjust this by your realized and unrealized gross profit. So, saan po manggagaling ang unrealized gross profit natin? This will come from your ending inventories. And based on the problem, no, from the intercompany sales, no, 50% was, ito siya. Half of this merchandise remained in Joanne's inventory at December 31, 2016. So this is now the ending inventory. Take note, we are computing for 2016. Okay, so this one is the ending inventory. Okay, so tada! You have 30,000. Yan. Saan po nanggaling ulit yung 30,000? This one is 75,000. Ayan. 75,000 less. Ay, given na pala yung 30,000 eh. So, yung cost niya is 40, di ba? So, hindi na natin kailangan mag-compute. Okay? Kasi given na pala yung 30 na yan. So, you now have 15,000. Kung cost yung binigay sana, no, na 45,000 o di 75 less 45,000. Okay, so, ayun. And then, your realized inventory naman, okay, or realized inventory profit, manggagaling po yan sa beginning. And in this case, tara, okay, given na rin po sa atin yung 6,000. Siguro one of the questions here is that, sir, why don't we multiply that by 75%? Okay? Bakit 100? Bakit 100%? Well, eto kasi sa consolidated cost of goods sold, 100% yan palagi, pati po doon sa sales. Okay po? So, this is now the answer for the first problem. Okay? Now, let's continue to the second problem. Bago natin basahin, dapat alam mo muna kung ano yung kailangan mo. And in this case, you are going to compute for the share in the net income of the subsidiary. Okay, so how do you compute for the share in the net income of the subsidiary? Concept muna tayo. Okay, you look for the income of the subsidiary from its own operation. Sino ba yung subsidiary natin dito? Sabi niya, Kevin Company is 75% owned subsidiary. So this is now the subsidiary. Rondo is the parent. Okay, in this case, sabi niya, Kevin reports net income of 390. So we need this. Okay, and the share of Rondo will be 390 times 75%. Okay. But take note, we have to adjust that by intercompany sales, lalo na kapag meron tayong mga upstream sales. So dito, Rondo. Okay, so yung beginning and ending inventories include merchandise acquired from Kevin. Okay, so this is an upstream sale. Okay, actually sinabi rin niya dito, Rondo Corporation, sells inventory items to its parent. Wait lang, parang nagkabay. Kevin Company owns 75%. Ay, a 75% owned subsidiary. Tama. So, eto si subsidiary. Eto po pala si parent, diba? Subsidiary of Rondo. And then dito, sabi niya, sales inventory. So, ang nagbebenta ay hindi si Rondo. Dapat dito tayo nag-umpisa. Yun. Kevin Company, diba? Dapat may comma din pala doon. Ayun, sales inventory. So, it's Kevin selling to the parent talaga. Ayun. So, ganun pala ibig sabihin yan. Kaya, upstream talaga siya. Sales to its parents, sabi pa nga niya eh. At 125% of cost. So, if you have your sales cost and you have your gross profit, if this one is 100%, it was sold at 125%. So, yung gross profit natin is 25%, no? Kung itra-translate mo yan, pag based on sales, this one will be 100%. Okay, so, diba? 25 divided by 125. This will now be 20%. Ayan. Para mas madaling mag-compute mamaya. Anyway, so bakit ko ba kinumpute yan? Kailangan kasi natin to compute for the realized and unrealized profits. So, ano po yung unrealized natin? It will be the ending inventory, 260 times 20%. Okay? What about your realized? That will be 125 times 20%. But then this is upstream sales. So we still have to multiply that by 75%. Okay, so let's try to do that, no? 125 times 20% times 75%, and then you have 260. This is now the ending inventory times 20% times 75%. Okay. Okay, so pag na-compute mo na yan, o di okay ka na. 125 will be your realized gross profit. This one will be the unrealized gross profit. Yung share lang ng parent. Take note, we are computing for Rondo's share. Also, this one, you multiply that by 75%. Okay, so hanapin natin yung calculator natin. 390 times 0.75. This one will be 292 pala. Muray natin. 292,500. Okay? Ito naman, you have 195,000 times 20% times 0.75 equals sana sinasabayan nyo ako mag-compute, no? I suggest you pause the video, you try to compute muna. Okay, and then tingnan natin kung pareho tayo ng sagot. Ayan. Then you have 260 times 0.2 times 0.75. Ayan, so you now have 39,000. Oops, sorry. 39,000. Ayun. Okay din ang magkamali. Okay, doon tayo matututo. Ako nga, madalas akong magkamali pag nagko-compute ako ng ganito. Ayan. So, taran! Tama. Ayun. 292. Then, na-compute na natin yan kanina. 39 for the unrealized gross profit and 29 to 50. Ayan. Taran! And this is now the answer, okay, for that problem. Share in the net income of Kevin Company. Okay po. Now, let's continue. So, in this problem, okay, the question is, what is the consolidated net income for 2016? O di ang saya nito, no? Puro 100%. Kasi whether it's upstream or downstream sa consolidated net income, nilalagay natin lahat at 100%. Okay? So, what do we need for consolidated net income? Of course, we need the net income from its own operation, no? From the parent and from the subsidiary. So, sabi niya dito, Maya Company purchased 75%. So, this one is the parent. So, the parent's net income, let's look for Maya's net income. Ayun, net income from its own operation is 260,000. Okay, next. Outstanding stock of lands. Okay, so kailangan din natin yung net income ni lands, which is, in this case, you have 100. Ayun. 143,000. Aside from that, okay, yung mga adjustments natin for the deferred gross profit and realized gross profit. Now, if you try to look at the problem, the acquisition happened on January 1, 2016, and it's asking for the consolidated net income for 2016. This means that there is no beginning inventory to consider. Okay? So, dun lang tayo sa ending inventory. O di, ang dali-dali, no? Hanapin lang natin yung deferred. Okay? Deferred gross profit from the ending inventory. So, let's see. During 2016, during 2016, Lance. Okay, sino ulit si Lance? Lance is the subsidiary. Okay, so this one is an upstream sale because Lance sold inventory, okay, to Maya. Okay, so you have 65,000. That is now the cost. Okay, it was sold for 97,500. And then Maya resold 60% of this inventory to outsiders during the year for 150,000. Okay, so parang nandun na, no? Okay, so i-try nga natin. Ano yung deferred gross profit natin? Okay, that will be the profit coming from your unsold items. So if you try to look at the entire profit, no? Okay, so magkano po yung buong profit natin? You have 97,500 minus 65,000. Okay, so this will be 532,000. Okay, so it's now 32,500. If all of this was sold, this will be realized sana. Okay, so okay lang. Pero sabi niya, resold 60% of this inventory to outsiders, meaning 40% of this, okay, is in our inventory. Ayan. So, let's try to compute 32,500 times 0.4 equals 13,000. So, this is now your deferred gross profit. Okay, so, let's see. Taran, you have 260. You have 143. Given po yan. Less your deferred gross profit, which is 13. And you now have 390. Diba? Kahit ito nga lang yung solution natin. And, pero syempre, if you want to check if your answer is correct, mas maganda rin, no? Sanayin natin, i-compute mo to at saka ito para ma-reconcile mong mabuti yung sagot mo. Okay? So, ayun. Okay? Ano pa ba? Kung may mga questions kayo, no, please feel free to post them in the comment section in our canvas po. Ayan. Okay, so let's continue. Ba't ayaw na? Ayun, okay. So, this problem, okay, is asking for the consolidated net income for 2016. So, what are the things that you need to compute for the consolidated net income for 2016? Okay. First, you need the net income from their own operation. So, you need this. Okay. Me? Excited much? Okay. So, you need this and you need that. Okay. So, ano pa? Okay, since consolidated net income lahat po at 100% yan. So, ibawas lang natin yung deferred gross profit natin, okay? And the realized gross profit should be added. So, sabi niya, merchandise from intercompany sales in Daniel's inventory. Okay, so, who is Daniel? Okay, Daniel is the parent and Miguel is the subsidiary. Okay. So, this 52,000, okay, which is from the beginning inventory, okay, kung beginning inventory yan, it means that this was purchased last year, 2015. So, we are going to use the gross profit of last year. And since it's the subsidiary selling to the parent, we use the gross profit of the subsidiary last year, which is 40%. So, we multiply that by 40%. Okay. Now, for the deferred gross profit, okay, we multiply this by your gross profit for this year, 2016. Again, no, this one came from subsidiary. Okay, so you use the gross profit for this year, which is 30%. Okay, so let's try to compute for that. You have 52,000, okay, times 0.4 equals 20,800. Nakaka-nervyos talaga. Baka mali na eh. 91,000 times 0.3. Dapat talaga na may rehearsal eh. Oops. Dapat daw may kodigo. Ayan, sabi nung kasama ko dito na nakikinig. Okay, so you have 27,300. If you are computing for the net income as far as the parent is concerned, no, we multiply this by 70%. Pag minority interest naman, you multiply this by 30%. But since we are looking for the consolidated net income, okay, we just use 100% of that. So you have 520 plus 325, okay? We add 20,800 and we deduct 27,300 because this is the unrealized gross profit. Let's see. Ayun. Okay, so kahit yan lang yung solution mo, actually, mako-compute mo yung kailangan. Pero again, no, what if you're given the same problem at ang tinanong sa'yo ay the non-controlling interest, okay, in the net income of the subsidiary? This will be your answer, okay? Saan nanggaling yan? This is 30%, 30%, 30%. Okay, why do you have to multiply that by 30%? Or why do you need to distribute this between the parent and the subsidiary? Because this is an upstream sale. If this one is a downstream sale, the entire deferred gross profit and unrealized gross profit, no, will be an adjustment in your equity holdings of the parent. Ayan. Or the parent's CNI as far as the CNI as far as the parent is concerned. Okay, so ayun. Yun lang yung, naman yung mga concepts na kailangan nating tatandaan. Okay po? Okay, so let's continue to the next problem. Parang paulit-ulit lang, di ba? Pagkabisado nyo na yung pattern. This one is asking for the consolidated net income. So, para hindi naman daw po boring, okay, let's compute not only for the consolidated net income but also for the consolidated net income as far as the parent is concerned or equity holdings of the parent in the net income, okay? And let's also compute for the net income for the minority interest, okay? Or the non-controlling interest share in the net income. Okay. So, what are the things that we need? Okay. First item will be the net income of the parent and subsidiary from their own operation. Now, where is the net income of the parent? So, who's the parent muna? Clark is the parent kasi Clark Corporation purchased 95% of the stock of Bruce. Bruce is now the subsidiary. Okay? On that day, the book value of Bruce net assets approximated its fair value. As a result of the purchase, Clark recognized 75,000 worth of goodwill. So, wala namang impairment na sinabi yung problem. Pag nabasa mo na siya, so chill lang tayo sa part na yan. Now, let's continue. During 2015, Bruce sold inventory to Clark. On December 31, 2015. Okay, wait lang ha. You have 2015, 2016. Aha. And the question is CNI for 2016. Okay. So, let's continue. Bruce had unrealized profits on its books of 12,500. So this one is the unrealized profits, okay, as of the end of 2015, which means this is the unrealized profits as of the beginning of 2016. So if you are computing for 2016 CNI, okay, your unrealized gross profit last year will be your realized gross profit this year. Okay. For CNI, that will be 100%. Now, if this is an upstream sale, okay, you have to distribute that between the two, no? Between the parent and the minority interest. Pero pag downstream yan, lahat yan pupunta sa parent. So, let's try to analyze. Sabi niya, Bruce had unrealized profits on its books. Ayan. Of 12,500. Who is Bruce? The subsidiary. Okay, so this one is an upstream sale. So, distribute natin yan mamaya. The entire inventory left on Clark's books, okay, had been sold to outside parties. And since it's already sold to outside parties, okay, this is already realized. During 2016, Clark sold inventory to Bruce. Okay, so Clark, the parent, selling to Bruce, the subsidiary. This one is a downstream sale naman. It had 18,750 unrealized profits. Okay, so binigay na rin sa atin. You don't have to compute. So what is now the CNI? We need this 625, okay, for the parent and subsidiary, which is 450. Let's continue. For CNI, okay, 100%. Okay, what was realized? Okay, your profit from your beginning inventory, since it's already sold this year, the entire 12,500 will be realized. And for the unrealized, the entire unrealized profit will be deducted against your CNI. Now, if you notice, no, bakit ito yung downstream sale? Okay, the entire 18,500 was placed here under the equity holdings of the parent in the net income. Well, because this is downstream. Basta pag downstream, dito lang siya lahat. Pero kung upstream, like for example, in this one, no, in this case, okay, it will be distributed, okay, between the parent, ayan, EHP, okay, and your non-controlling interest. Okay, so ayun lang, di ba? You can be given with the same problem ba? Baguhin lang yan, yung upstream gagawing downstream, okay? Or CNI, ang tatanungin lang ay NCI, NIS, okay? Or this one. So if you know this problem, hindi po kayo maliligaw. It's so easy to follow. Okay po, so let's continue. Okay, next problem. Ayan. We are now on intercompany transactions on PPE. This one is asking for the cost and accumulated depreciation of the equipment. Ayan. At the, ano to? Ayun. Okay. Found in the consolidated statement of financial position. So, ano ba yung pinaka importanteng concept dito? Syempre, yung favorite natin na concept, di ba? As if walang nangyari. Okay? So, as if it was not sold, no? To your affiliate. Yan. So, ano ba nangyari? LV Company sold equipment to Elvira, its wholly owned subsidiary. So, this one is a downstream sale. Okay? So, it was sold for 500. The equipment had cost LV 600,000. Who is LV? LV is the... Oops. Ano nangyari? Ayun. LV is now the parent and Elvira is the subsidiary. Okay, so downstream yan. Okay, this is now the original cost. So, tapos na yung problema natin. What is now the cost? 600,000. As if it was not sold, right? Why? Because, well, sabi niya, the book value at the time of the sale was 360. LV used a life of 10 years. Nasaan? Ayun pala. Well, ito dapat yung katuloy. No? Well, even though it was acquired for 500 during the consolidation process, okay, this 500 na PPE should be restored to its original cost, which is 600, okay, through the process of elimination, syempre. Ayan, so the cost is now 600,000. What about the accumulated depreciation? Now let's see, the book value at the time of sale was 360. So that's January 1, 2018. Now it's asking for December 31, 2018. Oh, parang ayos lang pala, no? So if the book value at the time of sale was 360, okay, let's try to analyze that. The cost was 600,000, your accumulated depreciation, lagay mo dyan, okay? The book value was 360. So at the time of sale, the accumulated depreciation is 600 minus 360, it's 240,000. This one is as of the beginning of the year, January 1. We are looking for the accumulated depreciation as of December 31. So what do? So, as if walang nangyari, okay, you simply depreciate this, okay, based on its remaining life. So, LV used a 10-year life, no salvage value, and straight line depreciation. Elvira will continue this practice. Okay, so, ayun. If this is being depreciated for 10 years, or you divide this by 10 years, you will now have 60. So you simply add 60 for the current year and you will now have 300,000 for your accumulated depreciation. Okay? Ayun. So as if walang nangyari, it will be restored to its original cost. Okay? And then the accumulated depreciation will be based on its original life and original cost. Okay, so let's continue. This one, how much did Sarah pay Robert for the machine? Okay, Sarah company owns 80% of Robert. So this one is the parent and this one is the subsidiary. On January 1, 2012, Robert purchased 120,000 for 120,000 a machine with an expected life of 10 years and no residual value. Robert sold the machine to Sarah January 1, 2018. During the preparation of the consolidation working paper for 2018, difference, no, 2012 then 2018. The following working paper elimination entry for the intercompany sale of machine was made. Okay, so you have the machine, gain on the sale, depreciation expense, and accumulated depreciation. How much did Sarah pay Robert for the machine? Ulitin nga natin yung question. How much did Sarah pay Robert for the machine? Now, if this is the elimination entry, you try to look at this. This journal entry is actually the purpose of this entry right here, no, is to restore the machine to its original cost, and the original cost is 120. So if you actually add this, no, to the cost of the acquiring entity, okay, you should arrive at 120,000. Tama po? So let's try to do that. 120,000 to 3. Ayan, minus 57,600. So we can assume that this one is acquired at 62,400. After this elimination entry, okay, your machine will now be restored to 120,000 pesos. So that's the easiest way, no? Another way is to, taran, tama ba? 62,400? Yun, 62,400. Okay. Another way is to use this approach, no? Medyo nakakalito nga lang pero you still arrive at the same answer. So you have the original cost of the machine and then you deduct the new accumulated depreciation. Okay, so that's now the book value as of the intercompany sale, and then you add the gain on the sale of the machine. Okay, and you still arrive at 62,400. Okay po. So, let's continue. And this one is asking for the amount of consolidated net income. Okay, so ganun na naman. Pag may consolidated net income tayo, we need the net income of the parent and the subsidiary from their own operation. So in this case, yung Fate Company purchased. Okay, so that's now the parent. 80% of the outstanding shares of Cindy. This is now the subsidiary. Okay, cost is 864 on that day. Cindy Company had 480 worth of outstanding shares and 600 worth of accumulated profits. Okay. For 2018, Cindy Company reported income of 216. And so we need that. All of the assets and liabilities of Cindy Company are at fair market value. Now, on December 31, Fate Company sold an equipment. Okay, so Fate Company sold an equipment to Cindy. Cindy is the subsidiary, so this one is a downstream sale. Okay, so it was sold for 90 that had a cost of 54. So, dito pa lang pwede mo nang i-compute yung intercompany profit from the sale of this equipment. So, 90 minus 54, magkano po yung 36? Di ba, mamaya mag-calculator tayo. The equipment is expected to have a useful life of 10 years from this date. Ayan. Now, for this year, 2018, Fate Company reported income. Who is Fate again? Fate is the parent. From its own operation, okay, in the amount of 240,000, which included the gain of 36. Ayun, nasabi na pala. Included the gain of 36 on the equipment sold to Cindy. Okay, so what is now the consolidated net income? Syempre, we start with the net income of the parent and the subsidiary. Okay, so in this case, you have 240 and 216, and then we remove your unrealized gain. Downstream sales. So, at 100%. Okay, kung upstream yan, it's still 100%, no, kapag CNI. Pero, kung ang tinanong sa atin ay eto or eto, then that 36,000 should be distributed, no, between the parent share and the share of the minority interest. Okay po? So, the answer is 420,000. Okay, so, let's continue. Ayan. This one, it's asking for 2018 net income attributable to equity holders of Joy Company. So, this time, it's not consolidated net income. Balik tayo sa previous problem, no? Ito ang tinatanong sa atin ngayon. Ayan. Okay, so, ayan. So, ingat lang tayo. So, what do we need? Okay, syempre, kailangan natin yung net income ng parent at net income ng subsidiary. And then we are going to distribute, no? Kung ano man pwedeng i-distribute. So for 2016, Joy Corporation acquired 90% of Chris Company. So Joy is the parent, Chris is the subsidiary. Joy uses the cost method analysis of data relative to this purchase indicates that goodwill of 70,000 was acquired on this purchase. The goodwill is unimpaired. Ayan, so ang dali ng trabaho natin, walang impairment. On July 1, Chris sold a patent to Joy. Okay, so kahit hindi siya PPE, pero ganun pa rin naman, diba, yung behavior niyan, long-term asset yan. The sales price was 140, Chris book value was 70. So ibig sabihin, meron po tayong profit na 140 minus 70, you now have 70,000. Chris estimates that the parent has a life of patent. That the patent has a life of 5 years and no salvage value. It will use straight line depreciation. Okay. For 2018, Joy's net income is 560 from its own operation. That's the parent. Chris had net income of 140. That one is the subsidiary. So what's now the 2018 net income attributable to equity holders of Joy Corporation? Well, of course, this one will be at 100% because this is the parent, no? This one will be at 90%. And then, eto na lang yung pag-uusapan natin. Okay. Now, for PPE transactions or long-term asset transactions, okay, all of your profits will be eliminated, no, at the year, no, of intercompany transaction. All of your profits coming from intercompany transactions, ganun pala dapat, will be eliminated at the date of intercompany transaction, and then they will be realized based on its remaining life. Okay, so in this case, the entire 70,000 will be eliminated. Okay, and then we are going to realize based on how long, no, has transpired. Ganun yun eh. Okay, ano natapos doon sa kanyang remaining life. Now, take note that this started on July 1, 2018, which means you're not going to realize 1 year. Ang i-realize mo lang dyan ay half year. So, 140 minus 70. Okay, you're going to defer the entire 70,000 and then you're going to realize 70 divided by 5 years. This will be the annual sana. So what is 70 divided by 5 years? 70. Okay, so you now have 14,000. Ulitin nga natin. Sana hindi ako nagkamali. Ayun, you now have 14,000. Okay. Times, ilang buwan ba yun? July to 2018. So, July 20. Wala na, pagod na si Lola. Ayan, 6/12. Tama po, no? Okay. Ano to? Upstream or downstream sales? Chris sold to Joy. So, this one is an upstream sale. So, multiply pa pala natin ito ng 90%. Okay, so, check na natin. And, ayan, may na-compute na ako dito. Ayun, 6,300, 90% ng 7,000. Okay, so, CNI, 100%. Deferred, okay, 100%, yung buong 70. Okay, and how much are you going to realize? Yung 7,000 ayan, buo. Okay, hindi naman buo. Kalahati yan ng 1 year, pero syempre, buo for CNI. But if you're going to compute for this one, because it's asking for this amount, you have to multiply that by 90%. Okay, so the same with this one, no, times 90% po yung 70,000. Okay, so I guess that's it. Okay. Ayan. Eto. Ano ang masasabi ninyo dito? Okay, I think this one is not included, no, in your quiz, but this will be your secret assignment. Okay, so if you listen to this video, okay, hanggang sa huli na to, and meron kang additional points kapag nasagot mo ang secret assignment. Okay, so this one is only asking for the non-controlling interest in the net income of subsidiary. So if we go back to the previous problem, okay, parang ito ang tinatanong. Okay, so paki-compute nga ito. Ayan, ito previous problem yan ha. Kung ito naman yung problem natin. Okay, so I guess that's it. If you have any questions po, please feel free to post them in the comment section in our Canvas. Okay, and thank you sa pakikinig.